Hello, my name is Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International. Here is your daily technical analysis of stock index futures. I'll start with UK FTSE futures. A bearish engulfing pattern on Friday. That should have been enough of a story on its own, coming as it did after a week of recovering higher. However, there is a bigger pattern out there that formed on Friday that may have some ramifications for the future. We have had a weekly key reversal down last week. Indeed, it was touch and go until the end of the session when it closed low enough to verify the move, especially as it closed below the combination of the flatlining medium moving average, currently 70.44, and the short medium moving average, currently 70.41. Now in the meantime, we have below the very recent 50% Fibonacci line at 69.76, and then the gently rising long moving average, currently 68.62, and these may have some supportive impact on this situation. Importantly, in the even greater scheme of things, we are also set, most of this week still to go, to possibly have a monthly key reversal here. If we close on Thursday the 30th either over 70.97 or under 69.66, then we'd be on. Right now we are looking at a lesser outside month. At least last week's move upwards has taken us away from a monthly key reversal down, but into the lesser outside month. Now so far today, higher opening in between the medium and the short medium moving average, would you believe it? Followed by a spike up towards last week's highs, but not quite making it before dropping back down below the short medium moving average and medium moving averages, and looking like a possible, well, shooting star type 1 bearish pattern right now. German DAX futures. A bearish engulfing pattern and outside day on Friday, as the market tried valiantly to try and reach the criteria for a weekly key reversal, but failed. It was also a close back below the slowly rising medium moving average, currently 15.616. Since about late August, the market has been practicing 2 steps down, 1 step up, and this is the latest iteration of that action. Below, we still have the old September 2020 reverse head and shoulders neckline, currently at 15.034, and the nearby rising long moving average, currently 14.995. Please also note that unlike some other stock index futures which have had similar moves, in the DAX futures here there is no monthly key reversal possible here at this time. Now so far today, a slightly higher open and a move straight up and through the medium moving average and the projected 50% Fibonacci line at 15.629. But that just halted over the short medium moving average, and we're currently just over the medium moving average and looking right now like a possible reactionary bullish harami, but not much of one really. We've come back down again, as I've spoken, to below the short medium moving average, below the projected 50% Fibonacci line, and below the medium moving average. Theoretically could be seen as an inverted hammer at this point, but it's still early yet. US E-mini S&P futures. An indecisive spinning top on Friday, with aspirations to be a hanging man pattern, but neither managing to make it as such nor to fill in the gap that had been left over from the previous weekend. The topside resistance that stopped the move was the slowly rising short medium moving average, currently 44.50, with some help from the broken lower time of the June to August rising wedge pattern, currently 44.74. This rising wedge pattern, sitting as it does over the whole market, whilst already having had its target reached on the downside, still has a strong bearish influence, and I suspect a role to play in the future. Now further below, well, we still have the near nexus of the extension of the upper trend line, currently at 43.50 also, of the other rising wedge pattern, the May to July rising wedge, and the slowly rising medium moving average, currently at 43.56. These are the main supports seen below. Meanwhile, overhead, we have strata of resistances between 44.76 and 45.59. However, over all of this, please remember my recent caution. This is one of the stock index futures that has done enough to make, with just the rest of this week to go, to make a possible monthly key reversal in September. Now if we close on Thursday, the 30th of September, either over 45.21 or under 43.89, then we'd be on. Right now we're looking at a possible outside month, as the markets come back in from a full key reversal down, seen at this time last week. Now so far today, an interesting day, as prices opened and moved higher, finally filling in the gap left over from last week, but in the process showing how strong the resistance is of the lower trend line of the recent rising wedge pattern, as it was capping the market and pushing prices back down below the short medium moving average and making it today look like a gravestone doji right now. French CAC 40 futures. A reactionary bearish black crow on Friday as the market tried to push up over the combination of the significant June high at 66.87 as well as the lower time, currently 67.07, of the broken May to July bullish Andrews pitchfork. Now I'd normally retire such a pitchfork such as this once it had been broken. However, the lower time may, just may, be part of the recent June to date possible diamond top pattern that I previously mentioned. If this diamond top pattern turns out to be the case, then we have a potential target X in the 62.42 area. It's far from a perfect diamond, especially as the low was formed before the high of the diamond. However, it's still there. Anyway, the market moved down and finished right on the upper trend line downtrend of this diamond top, currently 66.18, and a little above the slowly rising medium moving average, currently 65.84. I should also point out, once again, something I highlighted last week. The market did a lot to fill in the big weekend gap that showed last week. However, I have been very careful about my phrasing here. You see, the original gap has not been filled in. The gapping move up between Tuesday and Wednesday last week left a very small gap between 65.59 and 65.61. So the original gap has therefore not been filled in, and the first 2 days of last week could also be seen as an island bottom for all the implications that brings. Finally, this contract shares something with the DAX. It does not currently qualify to be a monthly key reversal. Not yet. So far today, a higher open and a test up to the 66.87 resistance before dropping down to the short medium moving average, currently 66.56, just below it. At the moment we're looking like a second bearish black crow and a possible candidate for day 2 in a strange, odd and rare, not so much rare maybe, or odd or strange, for day 2 in a 2-day bearish homing pigeon pattern. Thank you for listening. This short version broadcast gives you essential market patterns and consequences. Please be aware of the risk disclaimer posted with this broadcast. Copyright is Tofpik and ADM Investor Services International Limited. And here comes the final bit.